Hey, this is Warren Redlick. Lucid Motors had their third quarter earnings release yesterday and their third quarter investor call. Let's get into it. Are you ready? Let's go. Starting with key statistics, what we see is number one, Lucid delivered about 1,400 cars. They produced about 2,300 cars. Reservations, 34,000. Now, notice, first of all, they delivered about 900 fewer cars than they produced. I didn't think their answer was terrible to that in the earnings call. We'll get to that later, but it still doesn't look that great that you're that much of a shortfall on your deliveries. Reservations of 34,000, that is a drop from 37,000. So their reservations fell by a lot more than their deliveries, right? They delivered 1,400, their reservations fell 3,000. So something is happening. There was a brief mention of cancellations during the earnings call. We'll talk about that later. The number of studio or service centers did not increase. This is something they've been bragging about, that they're increasing the number of studios and service centers. That didn't go up, it stayed at 29. The number of employees, this is something I talked about in my preview call. They went from 5,600 to 6,600. That increases the cash burn. This is a difficult time for startups. A lot of tech companies are cutting back on employment. Lucid is growing employment. Now, you need to grow employment to grow production, to grow deliveries, and all that, but that's an issue. And then CapEx is actually down. They got 290 million in CapEx. And if you look at the previous quarter, this is from Q2, they did again have a gap between deliveries and production. So now that's an issue. Although this was first half production rather than the quarter, they were playing games with the numbers there. Potential sales fell from 3.5 billion here to 3.2 billion. That's not a good sign. You can see the studios and service centers is the same 29. Number of employees went from 5,600 in Q2 to 6,600. It's a big jump in the number of employees. We're going to get to cash and cash equivalents in a second, but CapEx, 310 million in Q2. CapEx in Q3, 290 million. They actually reduced their CapEx. They reduced their capital expenditures, and their cash equivalents and investments was down to 3.85 billion from 4.6 billion. That's about an $800 million a quarter cash burn. But this CapEx thing, this drop in CapEx, we're going to come back to that soon. Okay, on the balance sheet here, you see the cash again. Revenue, this line here, you've got $195 million in revenue. You've got $492 million in cost of revenue. It costs them 2.5 times as much to make a car as they sell the car for, and that doesn't include R&D operating expenditures, selling general and administrative operating expenditures. This is a problem. This is a problem for Lucid Motors. You can't make money if it costs you more to make a car than you sell it for. And what's coming, we're going to talk about this. What's coming is the mix is going to shift from their higher priced cars to their lower priced cars. From the Dream Edition is pretty much all sold. They've been doing the Grand Touring. Now they're going to start selling the Air Touring, and they're going to start selling the Air Pure. Those are much lower priced vehicles, but their cost of making the vehicles is about the same. So they're going to have less revenue per car. Is their cost of revenue going to go down commensurate to that? I don't think so, but we'll see. And you see cash used in operating activities, 569 million, CapEx 290 million. So their cash burn about $860 million. Now, this is a change here. Sufficient liquidity into the fourth quarter of 2023, CapEx 1.2 billion in 2022. You look at their Q2 guidance, sufficient liquidity well into 2023, and approximately $2 billion CapEx in 2022. So they reduced their capital expenditures plan by $800 million for 2022. And this wasn't that long ago that they told us this. They told us this in August. So we're 3 months later, and they've dropped their CapEx plans by $800 million for the year. This is a problem. This is a problem. This is, you need your CapEx for growth. If you're trying to grow your company, you need to invest in your factories. You need to invest in your sales methods and other things that you're doing, your logistics. If you're going to invest $800 million less in your business, that means you're $800 million less prepared to grow. Lucid's in a difficult spot. They have to choose between their cash burn and growth. And right now, facing really, really uphill situation for cash, they've decided, well, let's keep this fraud train going as long as possible. If we burn all our cash, we're going to run out of cash too soon. And the consequence is they can't grow. They can't grow as fast as they're trying to grow. You can't grow if you don't invest if you don't invest the capital in your factories, if you don't invest in the things you need to invest in, you have a problem. At the same time, they are still increasing their payroll. And some of that payroll is necessary, right? You need people in the factory to build cars. But if you don't have if your cars are being built by more people, and you're not using capital effectively to increase the productivity of your labor, then you're going to continue having high cost of goods sold. The cost of your cars is going to continue to be high, and this is a problem. I'm not going to go in depth on the documents here, other than to note that cash and cash equivalents is down to 1.2 billion, and they've got 2 billion in short-term investments. They're monkeying with their numbers. They're instead of having cash, they're doing short-term investments. They also have long-term debt of $2 billion. So are they borrowing at a higher price and investing? Are they borrowing at a high interest rate and investing at a low interest rate? I don't know what's going on there. I don't know when they accumulated this long-term debt. I just wanted to also mention that Lucid did a press release yesterday where they talked about how they've got a new plan to raise money, that they've entered an at-the-market program between the company, Bank of America, Barclays Capital, and Citigroup. Under the at-the-market program, Lucid may sell up to $600 million of shares of its common stock through the managers. And they've entered an agreement with the Saudis, to which the Saudis have agreed to purchase from Lucid up to 915 million of shares of the common stock in one or more private placements through at least March 31, 2023. And Ayer will pay a price per share equal to the volume weighted average price to the public of shares that Lucid actually sold in the at the market program during such calendar quarter. It's not clear whether the Saudis are committed to making this purchase or whether they can back out of it. It sounds like the Saudis are doubling down, but here's the problem. If Lucid is going to sell more shares to the public, it's going to just people are complaining about Tesla, about Elon selling shares, and look what it did to the stock price. Well, what do you think is going to happen when Lucid adds another $1.5 million in shares to the market? It's going to drive down the stock price even more. It's diluting existing shareholders. And look, I understand they have to raise money, but you have this problem. Like, when are you going to get to growth? When are you going to get to profitability? And if you go back to their SPAC merger from 2021, February 2021, they projected out when they would get to profitability, when they would get to positive cash flow. Because they've delayed production and deliveries, because they're going to deliver 20,000 this year. Now they're going to produce 6,000 this year, and they may achieve that number. We'll see. But that's a massive drop from what their plan was. Then you go out to 2023, and they refused in the earnings call to give guidance on how many they would deliver in 2023 because they don't know yet. But if you're pushing off your growth, then you're pushing off your profitability until later. You're pushing off your positive cash flow until later. And at some point, maybe the Saudis are going to keep floating this thing forever, but existing shareholders keep getting diluted. Does this company ever become profitable? Does this company ever grow? While the market for luxury sedans is declining, they've got this big SUV coming that they keep talking about. We'll see if it goes anywhere. Somewhere in the future, they're going to have a mid-range SUV. But if you put off your growth now, if you put off $800 million in CapEx until next year, and then maybe you're putting some of next year's CapEx off to the following year, then you're putting off your ability to develop that SUV. You're putting off your ability to develop that mid-range SUV that's coming later. All of the growth that you talked about is happening later, and we don't know what's the financial situation going to be for all these shares. This is a really, really tough problem. So we'll see what happens. Now let's dive into the earnings call.
Now, I'm delighted to say that we've made significant progress towards achieving our 2022 production target of 6,000 to 7,000 vehicles.
I just want to really quick note that their production target, their delivery target and production target for 2022 was 20,000 vehicles. They reduced dramatically their production target. First, they reduced it to 12 to 14,000. Then they reduced it to 6 to 7,000. And now they think they're going to get close to achieving their 6 to 7,000 production target. So Peter can wrap this as nicely as he wants to, and his posh British accent and all that stuff is great. But the reality is, this is a collapse compared to where we were February 2021 or even December of 2021. They've fallen massively. In less than a year, they've dramatically underperformed, and he keeps talking like everything's great. If I was a Lucid shareholder, I wouldn't think this was that great.
In Q3, we achieved a record quarterly production of 2,282 vehicles, more than triple that of Q2, and deliveries of 1,398, which was more than double that of Q2. Now, in Q2, we weren't in a position to give you a figure for a weekly production number. But today, I'm pleased to announce that we've now proven our ability to produce 300 cars a week.
Now, that was a reference to, in the Q2 call, a investment analyst asked, what's your production rate? How many vehicles are you producing a week, either at the end of the quarter or currently? And Peter said it would be misleading to answer that question. It would be misleading to give you facts. And now he's giving you 300 vehicles a week. My gut is his 300 vehicles a week is probably misleading, right? Because if you look at the numbers, production 2282 in 13 weeks, that ain't 300 a week. So did you manage to produce 300 vehicles in 1 week? Can you sustain that? We don't know. Based on Peter's history, based on Lucid's history, I'm going with that number is probably more misleading than the true number that they would have given in the last earnings call. But I'm openly biased against Peter because he has such a big history of lying.
And even more importantly, we have a visible pathway to our next incremental production rate.
We have a visible pathway to our next production rate. He doesn't say what that next production rate is. What does visible pathway mean? Is that like when I pick on Tesla, is that like when Elon says we have a visible pathway to a $5 trillion market cap? I don't know. I find Elon more credible than Peter, so I don't know.
We're working very hard to control what we can control, but the supply chain situation remains fluid. In fact, even now we're experiencing a challenge with one particular item that will lead to some very temporary time out for the line.
Okay, so Peter just disclosed there's another problem in the production line. Somewhere there's a supply chain problem that is holding up production. So when he said 300 a week, right now it's probably less than 300 a week. It's very temporary. What does very temporary mean? Why isn't it just temporary? He uses words to minimize problems. He uses words to exaggerate successes. This is the nature of a guy who's a serial liar. He's a serial deceiver. He's pathological. And for some reason, people keep buying it. I haven't bought it since September of 2020. Since September of 2020, I saw through this guy's being a liar. And the way he speaks about things is just dubious. But let's keep going.
However, we believe we can still achieve our 6,000 to 7,000 production guidance for 2022 despite this particular issue.
That sounds like they're not going to make 6,000. We believe we can. Yeah, that probably means you're not going to make it. Just going on history here. I'm just going on Peter's history of under-delivering, over-promising and under-delivering. December 2021, he told us they were going to do 20,000. They were going to do 20,000 deliveries in 2022. I think even early 2022, they were telling us they were going to deliver 20,000 vehicles in 2022. And 6,000 produced, not delivered, is a massive underperformance. And how many are they going to deliver in 2022? That's not looking good either. There's more good stuff coming.
Turning to logistics, we believe we've made significant progress in our plan to bring our logistics operation in-house and to restructure our logistics and manufacturing organization. We addressed some of the primary gating factors that impacted production in the second quarter. Even David and the new leaders we put in place have been doing a very good job.
Now, this is an important detail about how Peter Rawlinson lies. If you go back to the SPAC merger and pretty much all through 2021 and much of 2022, They kept telling us how great their team was. Then they fired or let go like 6 people, and they brought in new people, and now the new people are a great team. Well, but you told us the last people were a great team, and now we're supposed to believe the new people are a great team. It's just not working. And then how are you investing in logistics? How are you investing in your ability to produce more cars if you're cutting CapEx? CapEx in Q3 was less than in Q2. That is not a growing company. That is not the sign of a growing company. Increasing your payroll while decreasing CapEx is not a good sign. And why didn't you anticipate this logistics problem? This is the thing that Lucid was sold to us as, look, we're not like Tesla. We're real auto industry professionals. We know what we're doing. We're not going to have production hell. They mocked Peter and Eric Bach, who's now gone. They mocked Tesla for having production hell with the Model 3. Well, real auto companies don't have production hell. Lucid is going through production hell now. If you guys told us you were smarter than that and you weren't. And then you told us you had a great team and then you fired 6 of them and you brought in some new people. Well, how do we know the new people are really good? There's some serious problems here.
Just last week, we commenced production of the Lucid Air Touring, and I'm looking forward to personally deliver the very first one to a customer next week. Touring is our 620 horsepower dual motor all-wheel drive version of the Air with a 0 to 60 of around 3.2 seconds.
0 to 60 of around 3.2 seconds. So 3.4 maybe. Um, he just told us that they had a supply chain issue that's that's put a pause in production, and now he's telling us that they're producing. So which is it? Well, what's going on? Are you having a supply chain problem that's preventing you from producing or not? And about the Lucid Air Touring, this is a significant drop in price, so revenue per car goes down. I believe it's about $107,000 MSRP for the Lucid Air Touring, which is about a $20,000 drop from the Lucid Air Grand Touring, which is another, I don't know, $50,000 drop from the Lucid Air Dream Edition. And then they have the Sapphire that's coming in at 250,000 at some point that no one's going to buy because what's the market for $250,000 cars? That's going to be a very low volume vehicle. So their average revenue per vehicle sold is going to drop as they shift to the Air Touring, and then as they add the Air Pure at the end of the year, which is an $87,000 vehicle, I think, or maybe an 80. I think a lot of the reservations are around $80,000. So that's going to maybe even less than $80,000. That's going to dramatically reduce revenue per vehicle sold. Are your costs of production going to go down to match what's happening with your revenue? This is a problem.
And whilst I'm very excited to be able to offer a more affordable version of Air with Touring, I'm equally as excited by Lucid Air Pure, which will be our most affordable Air variant with up to 480 horsepower. We're on track to start production of Pure soon and expect to start delivering the first of these vehicles before year end.
Okay, so the Air Pure being a lower priced vehicle will not have a significant impact on even the fourth quarter numbers because they'll probably deliver the first Air Pure on the last day of the year if they get one out at all. When you look towards 2023, you're going to see that the mix of vehicles is going to be almost entirely Air Pures because that's where all the reservations are. And that's the people who might be willing to take deliveries. You're going to have revenue of maybe $90,000 a car or $80,000 or $85,000 a car instead of well over $100,000 a car. This is a huge problem if you can't get your production costs down, and we're going to see if they can do that. If they can't get their production costs down and their mix shifts to much lower priced cars, they have a huge, huge problem.
Stay tuned next week for our Lucid launch event for a lot more details.
I think we're going to hear a little bit more about this during the earnings call, but Lucid has announced that on November 15th, they're going to have a launch event for the Air Pure, maybe for the Air Touring as well. And maybe they're going to have hints about what's coming with Project Gravity, their large SUV that isn't coming until 2024 at the earliest. And my guess is really being pushed back to 2025. So this is fluff to try to distract people from the real problems at Lucid, which is you can't produce cars in volume, you can't produce cars profitably, your profit story has been pushed off, you have a cash problem, you're diluting shareholders by raising money the wrong. Not that there's a good way to raise money, but now you got to raise money in a difficult economic situation, difficult finance environment. Your payroll's going up, all kinds of problems here. But we're going to show you some shiny new toys on November 15th, and sometime next year they may be showing us more about Project Gravity. Showy events, Sapphire, whatever, they keep showing off things that, like shiny pebbles to distract you from the dirt. That's the real problem.
We talked about Grand Touring getting an industry leading 4.6 miles per kilowatt hour. And now I'm happy to say that Touring will be able to match the landmark 4.6 miles per kilowatt hour efficiency of the Grand Touring, albeit at a more affordable price point. And that's an important incremental step to bringing ultra-efficient EVs more attainable.
It's not a particular accomplishment to achieve more miles per kilowatt hour on a vehicle that has less weight. This is not shocking. The best miles per kilowatt hour on a Tesla is the Model 3, not the Model S, even though the Model S has the most range because the Model S has the largest battery pack. The Model 3 weighs less. The Air Touring and the Air Pure will weigh less than the other vehicles because the other vehicles are loaded with more motors or more luxury or larger battery packs. If you shrink the size of the battery pack and you remove some other parts, you've reduced the vehicle weight, you're going to get more miles per kilowatt hour. It should have more miles per kilowatt hour, not the same. That's actually disturbing that they're not achieving more miles per kilowatt hour on the vehicles that have smaller battery packs, lighter weight.
And we will continue to push relentlessly to get closer to what is our aspirational target of closer to 5 miles per kilowatt hour for a Lucid Air.
I will say this. I do like that that's an aspirational target. I think that Tesla's going to achieve that with the robotaxi vehicle. Unfortunately for Lucid, the real challenge is economic, not technical. I don't, if you guys follow me, you know I don't believe their claims about their technology anyway. I suspect that they're using larger battery packs than they claim. That's why their vehicles weigh so much. But right now, their problem is you got to produce cars in higher volume and you got to produce cars profitably, and you're not doing that. And by not investing in your growth, you've got a real problem.
We at Lucid enable more miles per kilowatt hour of battery. And this allows us to provide world-leading range with a smaller battery.
Okay, so here's the thing. Even if it's true that you have this great technology, if you can't produce it in volume, it doesn't really matter. If people can't get their hands on your cars, if you don't produce enough of them, if they're not reasonably priced, all of that matters. The reason why Tesla is dominating, I'm not trying to compare Tesla to Lucid, but the reason why Tesla is dominating is because they can manufacture at scale and they can manufacture at low cost. And they figured out manufacturing simplicity gets you there. And that doesn't even include their software advantages. Tesla has the real technology advantages. I won't even get into that. But you have to manufacture at scale. You have to figure out how to manufacture in high volume. You have to figure out how to get your costs down. And Lucid is way away from achieving that. And the question really simply is, are they going to be able to survive the next couple of years as the economy turns south? Are they going to be able to get their I don't know how you get your manufacturing to scale if you're not investing in manufacturing. If your CapEx goes down, you got a problem.
So offer exceptional rear seat ergonomics with a deeper footwell in both the Touring and Pure models.
This is a critical detail. Their higher end models actually have crappy rear seat legroom because they had to make more space for batteries because their battery pack is so large, despite them claiming that their battery pack and their space efficiency is great. When they get down to the Air Touring and the Air Pure, they're using smaller battery pack sizes so they can take away like a layer of batteries and give the backseat passengers more legroom. To me, that's like an obvious sign that you're a kludge, that you don't really know what you're doing, that your vehicle design really is crappy, that your high-end vehicle has less legroom than your lower-end vehicle. And it's because they had a kludge to squeeze enough batteries in to get the range claim they were going for.
In Q3, we introduced the Sapphire brand, Lucid's new high-performance, driver-focused brand. Sapphire represents the pinnacle of electric performance, finally achieving the satisfactory performance that I've so long searched for.
In other words, the Dream Edition that he told us was this great performing vehicle when he was introducing the Dream Edition wasn't really that good. And the Grand Touring, which he told us was such a great vehicle, wasn't really that good. And now they got a new vehicle coming. That's what he was really thinking about when he said he was going to have a great performing vehicle. Like, If you go back when he talked about the Dream Edition, especially the Dream Edition P, oh, this is the great performing vehicle that I was going for. But now it isn't, and now it's this new one. Look, shiny pebble.
Air Sapphire will be the very first Lucid product to bear the Sapphire name, and will build upon our technical prowess to take electric high performance to the next level.
So obviously, there's going to be a Project Gravity Sapphire version as well, and this company is so much about branding and so little about manufacturing. Like this is one of those things where if you're run by marketing, you're run by the marketing department, you get this kind of crap. You're run by engineering, you get engineering. And Lucid is playing financial games and they're monkeying with marketing. And the problem is, you've got to manufacture cars, you've got to do engineering, you got to do really good stuff, and they're not getting there. You got to engineer for manufacturing efficiency, not for showy numbers. And we'll see. I mean, Sapphire, who knows when Sapphire is actually going to be available for people to drive? Is it going to be better than a Plaid S? Who knows? We don't know. We know that you told us the Dream Edition P was going to be this awesome car, and it gets smoked by a Plaid S. I think it gets smoked by my car. I have a Plaid X. I have a Plaid X. It's a 5,300-pound SUV that's faster than your Dream Edition P, your performance car that you had before. We'll see what you deliver, but it doesn't really matter. Even if this Sapphire vehicle does perform better than a Plaid S, which good luck with that. And you manufacture at scale, and how many people are going to buy a $250,000 car?
At the heart of Lucid Air Sapphire is the three-motor powertrain, the first from Lucid, featuring a brand new twin-motor rear drive unit and a single-motor front drive unit.
Just to be clear here, Model S Plaid and Model X Plaid have a three-motor layout. So Lucid is just basically copying what Tesla did with the Plaid. Although it's unlikely that they're going to achieve this carbon fiber sleeved rotors that allow the rotors to spin up to 25,000 RPM. So, how are they going to make this vehicle achieve the same levels of performance as a Plaid? What are they doing to deal with the challenges of having a vehicle achieve that level of performance? Are they going to be able to achieve it? Again, I don't think this really matters because it's not going to sell in any meaningful volume. So who cares? And Plaid S is like $130,000 car. Maybe they sell 10,000 a quarter, 40,000 a year. You're talking like $250,000. How many of these things are you going to sell? A couple thousand a year, maybe in your dreams? That doesn't have a meaningful impact on your long-term performance as a company. You're establishing a brand when you should be establishing manufacturing. Make the cars good. That establishes the brand. Talking big talk and fancy pictures don't make your brand. What makes your brand really strong is if you make great cars and you make them in volume so a lot of people see them. And you're not there.
The twin rear drive unit introduces new heat exchanger technology and heightened coolant flow rate. In addition, the battery system is upgraded for higher power and more precise thermal logic. And with over 1,200 horsepower, Lucid Air Sapphire is not only the most powerful electric sedan in the world, it is the most powerful sedan in the world.
Now think about this for a second. How much engineering resources is Lucid Motors devoting to developing a car that will sell 1 or 2,000 units a year? Think about the executive decision to say, look, we have this great car, the Dream Edition. We have this great car, the Grand Touring. We keep telling everybody we have the best cars in the world. Now we're going to go make this really, really trivial car in terms of the grand scheme of things. This thing we're going to sell maybe 1,000 or 2,000 of a year if we're lucky. And how much engineering resources are you devoting to doing this? See, Tesla did that with Plaid, but Tesla was already a large and successful company when they refreshed the S and X and went and did the Plaid powertrain. They were already a successful company that was making a lot of cars and making a lot of money. Lucid isn't in that position. You should be devoting your engineering resources to making your regular cars better, making the Air Pure better, and getting your production up and running. That's where your engineering resources should go. You're spending money, and you've got a cash burn problem. You're spending money on engineering a car that's going to sell such low volume to just push this branding notion. This is just From my perspective, and I am a Lucid shareholder, I own one share, but from my perspective as an outsider, really, this is not the right management strategy. The right management strategy should be to focus on getting your manufacturing down and don't waste money on crap like Sapphire. No one cares. It's not going to sway investors. It's not going to make you a profit. It's not going to make you profitable if you're only going to make 1,000 of them a year. Think about amortizing this R&D cost of getting this Sapphire thing up and running and amortizing that over however many vehicles you're going to sell. Your cost of goods sold is going to be $1 million a car. You're going to sell them for $250,000 a car. This is nuts.
We're regularly testing Sapphire now. In fact, I'm currently personally test driving Sapphire, and I'm satisfied with the progress it's making. We expect to start production in the first half of 2023.
Just remember, these are the kind of promises he made in 2021 before the SPAC merger when they said they were going to start delivering cars in the spring. And they were going to deliver, I don't remember, 6,000 cars in 20, or it was 5,000 cars or something like that in 2021. The same kind of promises they made even in early 2022, but we're going to deliver 20,000 cars in 2022. He keeps making promises like that. Why would anybody expect him to deliver on the promises when he keeps underperforming his promises?
We're also delighted to say that Project Gravity SUV will be ready to be unveiled soon. We're planning events in early 2023 and will begin taking reservations from that moment ahead of the start of production in calendar year 2024.
It's not clear whether they're going to reveal much detail about Project Gravity on November 15th. It is clear that they're planning some event sometime in 2023 to provide more details on Project Gravity and start taking reservations. Project Gravity is their large SUV that's probably roughly a competitor to the Tesla Model X. Who knows exactly what it's going to be. And then production in 2024. But again, if you're pushing off your CapEx, what does that mean? I can't, I'm going to beat that drum until it's dead. That they put off their CapEx, they put off their CapEx, they put off their CapEx. Reducing your CapEx is not a good sign for future growth. It's not a good sign for future models. It's not a good sign for anything. And really, your engineering resources and all your attention should be on the Air Pure because that's going to be your high volume vehicle. That's the vehicle that matters. If you can get if you can manufacture Air Pure at scale, and you can get your cost of manufacturing Air Pure down, maybe you have a chance. But that's not where your focus is. You're focusing on some future fantasy vehicles that may not sell in any volume at all.
I'd go so far as to say that I believe the performance metrics of Gravity are going to be unsurpassed within its class.
So you're telling me that Project Gravity is going to do 0 to 60 in 2.5 seconds? Okay, because that's my Plat X. You're going to have to do a 2.5 second 0 to 60 on that Project Gravity. Anybody think they're going to make that? I mean, maybe you're going to have some Sapphire edition that's going to have 3 motors and 1,200 horsepower. I've got, I don't know, 1060 horsepower. We'll see, baby. We'll see. But who cares? If it's a $300,000 car, who cares? No one's buying it. Too expensive.
We're going to take the same space concept, the range, the efficiency, technology, design elements, and performance, and apply all that to create what I believe will be truly a landmark SUV. We're readying our factory through phase 2 here at AMP1 in Arizona. Specifically, we're expanding the north end of the body shop to get ready for Project Gravity and the south side of the building. The new assembly halls will run both Air and Gravity down that line. Now, I believe Gravity can have as much, if not even greater impact upon the SUV market than that Air has for the luxury sedan market.
Air hasn't had an impact on the luxury sedan market. You've delivered like, I don't know, 2,000 cars. How many cars have you delivered in total? Is it 2,000 cars yet? You delivered 1,400 in this quarter. Maybe I don't think you're at 3,000 cars yet. How is this an impact on the market? Lucid Air hasn't had an impact on the luxury sedan market. So saying Project Gravity is going to have a bigger impact than that, bigger than 0 is nothing. You haven't had an impact. You have an impact when you sell a lot of cars, not when you just do talk and you get awards from magazines. That's not having an impact. That's just pumping your ego.
Stay tuned for our launch event next week, where we'll go through the Lucid Airline and provide a sneak peek on the Gravity SUV.
Okay, so we'll see the Air Touring and we'll see the Air Pure. We'll get presumably full details on those vehicles. Although I thought we already had full details on those vehicles. And then we're going to get a sneak peek of Project Gravity. We already had a sneak peek of Project Gravity, so what more are you going to give us? We'll see. Going to dribble out details on something it's a 2025 vehicle, and we're in 2022.
But I think it's very important to highlight that Lucid Air has always had world-class software. You've likely just never seen it.
Lucid has world-class software, but likely you've never seen it. I can't know. I haven't ridden in an Air. I saw one in a dealership. My impression is the software is not that great. It's not that special. Again, you keep claiming that he's part of this call. I don't know how much of it I'm going to include in the edit. Is him talking about how great their software is and how many updates they've done. Isn't that CapEx? That when you're improving your software, when you're investing in your software, that's R&D and CapEx. If you're not spending as much money on these things, you're not making the improvements. I mean, maybe you're getting more efficient at all this stuff, but really, largely for most companies, if you're not investing in CapEx, then you're not investing in growth. You're not investing in improvements. If you're cutting that stuff, then you're cutting your rate of improvement. You're cutting your rate of growth. And this idea that you have world-class software, really? I think we know which company has world-class software in the car, not Lucid. I'm not saying it's terrible. I don't even know. I've certainly seen reports from others indicating that it's not that great, but I don't know. Doesn't matter if you don't make a lot of cars. You got to make a lot of cars.
Our world-class software team, led by Mike Bell, will be releasing many more features in the very near future. In fact, just last week, we announced Sirius's XM's radio audio entertainment experience will be a standard in-dash feature across the full lineup of Lucid vehicles. Lucid owners will receive a full 3-month trial subscription.
That's one of your big software claims is you're adding Sirius XM to your cars. How is this a big deal? And you're giving people a 3-month free trial? This is a big deal on $100,000 plus cars? But keep saying world class. It's working. It's working. People are buying it.
We recently launched our Lucid vehicle accessories, which includes the Lucid Connected Home Charging Station, the first step into the company's future energy ecosystem.
Again, he talks about all these grand plans of all these big things that they're doing. You can't expand into all these areas unless you have CapEx. You have to spend money to achieve this stuff. You can't just wave a magic wand and it all happens. And he talks big about all these things they're doing. When you're cutting your CapEx, you're cutting your ability to invest in new things. You're cutting your ability to grow. You're all over the map. You're doing way too much. Like just make the cars. Make more like right now your business is you got to make cars and you got to make them to volume and you got to solve your cash burn problem and you've got to generate cash so you don't run out of money. Because if you keep raising money from investors, from the Saudis and from the banks, you're undercutting your retail investors. And at some point, somebody might say, we're not giving you money anymore. And then you're under. You're done. It's not looking good.
This home charging solution can support up to 19.2 kilowatts of electrical power, which enables charging of up to 80 miles per hour to match Lucid Air's industry-leading fast AC charging rate.
He's talking about a 90 kilowatt charging rate at home. That's great, but is it really necessary? I mean, most of the time people are charging overnight, and 8 kilowatts is fantastic for charging overnight. 90 kilowatts is like I need to charge my car at home in like an hour, two, an hour. Like you need to charge your car. How often do you need to charge your car at home in an hour? Like, charging from 0 to full is something you do when you're on a trip, not when you're at home. How many people need this feature? Just seems, and how many amps is that gonna, how much, what's the wiring gonna be at home to get 90 kilowatts? How many amps is that? You're gonna spend $10,000 on wiring at home to make this viable. It's nuts.
I'm delighted to announce that we recently validated battery cells with another global battery supplier. We expect this agreement, along with our existing agreements with LG and Samsung, to give us sufficient cell supply both in 2022 as well as 2023.
Sufficient cell supply. You've got LG Chem and Samsung, which are large battery makers. And what are you going to make? 20,000 cars in 2023? I mean, you're claiming you're at a 300 a week vehicle production rate. So times 50 weeks, that'd be 15,000 cars if you're able to sustain it. And you're going to go to some new production rate. So maybe you're going to go for 20,000 cars in 2023 or 25,000 cars. That's not a lot of batteries. What do you need this third supplier for? And not that there's anything wrong with it, but LG Chem and Samsung are already great suppliers. Who's this new supplier? And why not tell us who the supplier is? Why is everything so secretive all the time? So I think we can expect in the future, we're going to see a press release where Lucid's going to announce they have a new pact with Panasonic or CATL or somebody else for new batteries. It's probably a nickel-based chemistry, so it's probably not CATL. So Panasonic's a good guess. Maybe it's Tesla. Maybe they're buying batteries from Tesla. Maybe they're going to go to 4680. I don't think so.
On the software experience one would truly expect of a Lucid Air, and launched our technology division. Let me turn it over to Sherry for an update on our financials.
Thank you, Peter. And thank you to those who are taking the time to join us today.
Just real quick here, this is Sherry House. She is the CFO of Lucid Motors. She's going to go through her stuff. I'll cover that, and we're going to get to investor questions after that.
Turning to our third quarter financial results. As Peter mentioned, we produced 2,282 vehicles, more than triple our Q2 production numbers, and delivered 1,398 vehicles, which was more than double Q2. The variance between production and deliveries is primarily a function of vehicles distributed across three areas of the delivery process: vehicles in transit, vehicles awaiting pre-delivery inspection, and vehicles awaiting delivery to a customer.
Okay, so that was an important detail. She's breaking down the 1,000 vehicle shortfall or 900 vehicle shortfall between production and deliveries. Did it make a lot of sense?
The variance between production and deliveries is primarily a function of vehicles distributed across three areas of the delivery process: vehicles in transit, vehicles awaiting pre-delivery inspection, and vehicles awaiting delivery to a customer.
I don't know. I'm not so sure I buy that. You're claiming you've got these issues, but if you reached a production rate of 300 vehicles a week, that's 900 vehicles over 3 weeks. If you sustain 300 vehicles a week for 3 weeks. Now, we don't know. The 300 vehicle week might have been in October or November rather than in Q3, because Q3 ends at the end of September. So when did you achieve your 300 vehicles a week rate? Probably not in that quarter. So maybe you're talking about 200 vehicles a week or less than 200 vehicles a week, because 2282, you're less than 2282 over 13 weeks. That's less than 200 vehicles a week. But maybe at the end of the quarter, you're up over 200 vehicles a week. So you've got over 3 weeks, let's say you've got 600, 700 vehicles that you've got to deal with. How long is it taking you to do the things you need to do to get those vehicles to customers? And how many of the problems are really order cancellations, people deciding they don't want them? Since you lost 3,000 orders, your reservations fell by 3,000. They didn't acknowledge that, at least yet. How many people were offered delivery of their vehicles and said no? I didn't hear that.
We continue to have strong demand with more than 34,000 reservations.
Okay, let's be clear. We have strong demand. The reservation number went down. The previous reservation number was 37,000 as of August 3rd, 2022. Now, as of November 7th, 2022, 3 months later, your reservation number went down. This is not strong demand. I'm sorry. This is not strong demand. This is, Sherry House is channeling Peter and misleading people by saying that's strong demand. That's not strong demand. You would presumably want your reservation numbers to be rising, not falling. Claim strong demand.
the reservation number in context, this value equates to the amount of our current annual tooled capacity in AMP1. This also compares to the over 37,000 reservations we had in Q2. The reservation calculation includes new reservations, nets out all deliveries that we accomplished in Q3 and Q4 to date, and also nets out cancellations. It's important to note that this number does not include the up to 100,000 vehicles under the agreement with the government of Saudi Arabia.
Did you notice how she slipped in cancellations but didn't quantify it? And then she quickly went to the 100,000 vehicle commitment from the Saudis? Cancellations. I heard cancellations. Tell me more about cancellations. Strong demand doesn't fit with cancellations, does it?
We expect deliveries to start next year. Meetings have been ongoing with the government, and we're actively working on scheduling of the first deliveries. We also have not opened up reservations for Project Gravity SUV. We expect to start taking reservations in early 2023, opening up what we believe will be a very large and incremental addressable market for us.
So what happens in early 2023 when you announce Project Gravity and nobody orders one? It's going to be interesting to see how they try to tweak that one. Where are the reservations going to come from for Project Gravity? Who's going to put down money in early 2023 for a vehicle that's not going to be delivered for 2 years from a company that might not be around in 2 years? I mean, maybe the Saudis are going to throw some reservations in, but it's going to be interesting to see who's going to admit on Twitter that individually they have a reservation for a Project Gravity. How much is it going to cost for reservation? These are all interesting questions. We'll see where that goes.
Turning to our P&L. Q3 revenue was just over $195 million, which represented a quarter-over-quarter increase of 101%. We remain intently focused on scaling the business and continue to expect to see significant growth in revenue as delivery volumes ramp. We're also excited about our recent launch of Lucid vehicle accessories, an expanding line of accessories that serve as a stylish complement to the entire Lucid Air vehicle lineup. In addition to the Lucid connected home charging station that Peter mentioned, we also announced a number of other accessories, including a cargo capsule that many customers have been asking for.
A cargo capsule? How many of those are you going to sell?
Turning to our cost of revenue. Cost of revenue was $492.5 million, which includes direct parts, materials, shipping and handling, IT costs, overhead, personnel costs, including wages and stock-based comp, estimated warranty costs, and inventory write-downs, primarily related to reducing inventories to their net realizable value. Additionally, we recorded a lower of cost or net realizable value adjustment of $186.5 million in Q3. This amount contemplates the value we anticipate receiving upon vehicle sale after considering costs necessary to convert the inventory on hand into a finished product.
That sound like they have to spend money to make their cars viable. Like they have inventory on hand, but they have to convert it into... What are you talking about? You've got inventory on hand that isn't ready to be delivered? That was some mumbo jumbo there that I didn't get. I'm not saying I understand it. I'm not saying I know what it meant. I'm saying I don't know what that meant, and that deserves some explanation that I don't think we're going to get.
During this quarter, our LC NRV impairment increased primarily due to product mix and an increase in inventory levels, including firm commitments.
An increase in inventory levels and firm commitments. Again, what does that mean? I'm not sure what that means. It doesn't sound good.
Moving to operating expenses. We're still in the growth stages of our company and investing behind our strategic priorities, but we're doing this in a prudent and methodical manner. As I said last quarter, we're instilling a culture of cost consciousness, and we're working across the company to identify and execute on cost efficiency opportunities. R&D expense totaled approximately $213.8 million.
That R&D increase is a slight increase on Q2. At least it's not down like CapEx.
We ended the quarter with 29 studio and service centers, flat from Q2. We opened our first studio in Saudi Arabia at the end of October, as well as our first Texas studio in Plano.
Although they've ended the quarter with the same number, they've added two more studios or service centers, one in Texas and one in Saudi Arabia. So they are still growing that. That's more investment. So I assume that's CapEx.
Our overall performance in the quarter was a net loss of negative $530.1 million.
I just want to be clear. I don't think the net loss figure is terribly important. You want to be making money, you want to see them grow, but this is an accounting number. A much bigger issue is where's your cash? Companies that are startup companies that are growing are going to lose money early on in sort of an accounting sense. But the real question is, when are you going to get cash flow positive? Because once you're cash flow positive, you can keep going. If you're cash flow negative and you run out of cash, you're done. You have to raise money, you have to do all these other games. If you can get cash flow positive, that's the big deal, even if you're still losing money. So I'm not focusing on net loss as an issue for the company. I do think gross, not getting to the point where you can make the vehicles for less than it than the price that you sell them at. Your cost, getting to the point where you produce a vehicle for a lower cost than you sell it for is a big deal, and they're nowhere close to that either. That's a significant issue. But again, if you can scale, maybe you can achieve that. Right now, they're not scaling enough to get even close to that. They're at like 2.5 times the cost of production that they sell the vehicle for. And that doesn't include other costs.
Moving to the balance sheet, we ended the quarter with just over $3.85 billion in cash equivalents, and investments, with total liquidity of $4.2 billion when considering our global credit facilities.
You notice that she's massaging the numbers to say we don't have a cash problem, we don't have a cash problem, we don't have a cash problem. If you're burning $800 million a quarter and you got $4 billion total, well, that's 5 quarters, right? And if you shifted that $800 million in CapEx to next year, then next year's quarterly cash burn should be higher. Are you going to keep kicking that can down the road and stalling your growth to try to preserve cash? This is just a challenge for Lucid they got to figure out, and right now they don't have an answer.
We continue to drive our growth plan and capture significant market opportunities we see. We do want to maintain the flexibility to raise additional capital.
Okay, so this is an important detail for me. We continue to maintain our growth plan. If you're cutting your CapEx, you're not maintaining your growth plan. Your growth plan has to include spending money on the capital to achieve your growth plan. So if you're kicking that down the road, then you're delaying your growth plan. So you're not maintaining your growth plan.
Our major shareholder, the Public Investment Fund, has expressed a willingness to support us in a future capital raise on a pro rata basis.
Expressed a willingness. You remember when Elon said funding secured and people said funding wasn't really secured and the Saudis weren't really committed to funding Tesla? Expressed a willingness? Is that a binding commitment? It doesn't sound like a binding commitment to me. It sounds like you're saying we have additional potential to raise money from the Saudis, sort of, maybe. Not great.
We are putting in place a $600 million at the market program, which will create flexibility for us to raise new third-party equity capital. Combined with a pro rata participation by the Public Investment Fund, this would allow us to raise up to approximately $1.5 billion net of fees and other operating expenses.
So this is a plan. This is what I showed you earlier, the Lucid Cap Raise program. This is what we were talking about. $600 million at the market and then $900 million from the Saudis. But there's no guarantee you're going to have investors willing to buy your stock, and there's no guarantee, as far as I can tell, that the Saudis will match. It's like a 1.5 to 1 match. The Saudis will buy 1.5 to 1 of whatever other people buy. Maybe that's to maintain their 60% share of the company, but we don't know that they're going to go along with it.
The ATM program provides us with an attractive option to raise capital, but we have no obligation to execute on the program, and we will continue to be opportunistic in our approach to financing.
We have no obligation to go forward with the program, and nobody else has an obligation to participate in it, it sounds like. So this is just like Lucid does this every quarter. They come up with this is how we might raise money. We keep seeing there's a release. Oh, we're going to do this shelf. What happened to the shelf registration? They had a shelf registration that they were going to raise money through the shelf registration. What happened to that? They just keep popping up things to get press and things to tell stories instead of making cars. Make the cars. Make the cars in volume. Get your cost of manufacturing down. Produce more cars. That's what you need to do. All this other stuff is mumbo jumbo. No one cares.
Our strategy is to take a holistic approach towards funding the business. We believe we have access to a variety of available options in debt and equity markets, as well as access to low-cost government programs. We'll continue to be opportunistic in raising capital, and this ATM program is one incremental tool in our broader funding strategy. Turning to inventory. Inventory in the quarter increased due to a combination of our production volume ramp and vehicles in transit to customers. However, we reduced work in progress inventory by more than half relative to last quarter as we made progress on completing production of in-process vehicles from Q2.
So this is one of those weird things. Like, how are you counting production? Are you producing vehicles that aren't really complete and counting them as produced and putting them in inventory as unfinished, and then you finish them? And there's something funny with those numbers that you're producing vehicles and putting them in inventory, but not delivering them to customers because they're not really ready for delivery, but they're still produced. I I'm fuzzy on what that one means. That just doesn't sound right to me. And I don't, I'm not saying I understand it. I'm saying I don't understand it because it's not explained well. And she didn't mention cancellations.
Moving to our international expansion efforts. Just recently, Peter and I and some of the Lucid team were in the Kingdom of Saudi Arabia, meeting with government and banking partners in conjunction with the opening of our studio in Riyadh. We're already starting to realize the benefits of the KSA relationship in the $3.4 billion in economic support. We were happy to announce the signing of a memorandum of understanding with the Human Resources Development Fund, or HRDF, in Saudi Arabia, as well as the receipt of the first grant from the Ministry of Investment, Saudi Arabia, also known as MISA. HRDF, which is part of the National Development Fund, will contribute 75% of the training costs and salary support for more than 1,000 employees, resulting in an estimated contribution of more than $50 million over a 5-year period.
Contribution of $50 million over a 5-year period, $10 million a year, starting when? This is a drop in the, this doesn't even deserve a mention in your earnings call. You're I don't know, a multi-billion-dollar company. That's nuts that you're excited about $10 million a year over 5 years in the future.
This collaboration and investment from HRDF will allow Lucid to provide essential and meaningful training opportunities for Saudi nationals, many of whom have not worked in the EV space previously, and will be instrumental in making sure we have well-trained professionals as we launch Lucid's first international manufacturing location.
I'm going to translate that for you. We don't have a viable labor force in Saudi Arabia to staff the factory that they're building. And they're going to spend some money training them. They've never worked in the EV space before. They probably never worked in the vehicle space before. They may not have worked in manufacturing before. And you're going to recruit 1,000 Saudi nationals, most of whom probably don't want to work in your factory. The factory is probably going to be staffed by people brought in from India. I don't know what their plan is. I don't know how they're going to achieve this, but this is going to be a serious problem for Lucid Motors. Do the Saudis historically are they known for a great work ethic in their labor force? This Saudi factory is going to be a colossal mess if they ever get it off the ground.
Moving to CapEx. We expect capital expenditures for 2022 to be around $1.2 billion. The reduction in CapEx guidance for 2022 is largely a function of timing and does not represent an overall reduction in the budget. Any dollars not spent in 2022 are anticipated to be spent in 2023.
Okay, so the $800 million you're not spending this year, you're going to spend next year. So your cash burn, you just pushed your cash burn off.
A corresponding shift from the end of 2023 into 2024 is likely to occur.
And you're shifting some CapEx in 2023 to 2024. You're pushing off growth, you're pushing off growth, you're pushing off growth. So the big takeaways from the Lucid earnings call are: number one, they lowered their CapEx. I hit that again and again and again. Number two, their reservation numbers dropped 3,000 while delivering cars. Where's the growth? You're spending all this money on sales, outlets. Where is the growth? Why aren't your reservation numbers growing? Cancellations, they weren't very clear about cancellations. It appears that some customers are canceling their orders. Their order mix is going to shift towards air pure, so their revenue per vehicle is going to go down. It's not clear that their cost per vehicle is going to go down enough to match that. Their cash situation is iffy. Yes, they have some potential ways of raising cash, but those aren't like very bright prospects. Like, you're going to sell at the market, through these banks. How much are they going to pay for the stock? How much are the Saudis going to pay for stock? These are all problems. Lucid stock is currently trading around $11 a share. I think if you get to this point where you've got these third parties buying stock, the Saudis are buying more stock, you're diluting the company more. I don't like making short-term predictions, but if that's going to happen, you're going to see the stock price is going to have to go below $10 a share. Does it go down to $8 a share? And the more the stock price goes down, the more shares they have to sell to get the cash they need to keep this thing going. And they're going to borrow money. What are the interest rates on the borrowing? What does that do to their long-term costs if they have all this money that they've borrowed? Fundamentally, Lucid has a problem, and the problem has always been you've got to scale production. You've got to get to the point where you're producing cars and selling them for more than you're paying to build them. And they seem like they're a long way from that. And as long as they're a long way from that, they're risking running out of cash. And now you're sitting there as a bank or as the Saudis. And at some point, you've got to make a decision. Are we going to continue funding this? Are we going to throw more money into this? My own take is, maybe the Saudis are going to fund this forever and they just don't care. They do have a ridiculously large amount of money. Maybe they just say, the heck with it. We'll throw another 10 billion in. We'll throw another 20 billion in, whatever. But at some point, they may recognize this isn't a good move. If they let it go bankrupt, this is, think about the Saudi perspective. They could let it go bankrupt and then they could buy it out of bankruptcy themselves. And that might be a better use of their money. And then they build their factory in Saudi Arabia using Lucid's vaunted technology, whatever that is. And they, hire some of the people from the team and pay them to get their factory in Saudi Arabia up and running. Maybe they give up on the American factory because, frankly, there just isn't demand for these vehicles. It's not necessarily a viable entity. Maybe they use, if there is any valuable, I see, I don't know that there's any valuable technology. Lucid claims they have this spectacular powertrain technology, all the, they brag about technology, technology, technology. It doesn't matter how many times Peter says technology. Is it real? Is it valuable? Can it be manufactured at scale? Do you have a way of manufacturing it at scale? So far, the answer to that is no. So, I mean, they've gotten past my earlier projections that they weren't going to make a single car. They certainly made a single car, but they're making cars. They're losing money on every car. They make more cars. They lose more money. I do think I saw improvement in the there's some minor improvement that, their cost of making cars went to 2.5 times what they sell them for instead of 3 times what they're selling them for. If that's great, okay. But as you shift to the Air Pure, I think that's going to go back up. I don't know that there's a solution to this for Lucid Motors. If you're a Lucid shareholder, I do own one share. As a Lucid shareholder, I'm not optimistic about my stock going up. I think it's likely to continue going down, both for macroeconomic reasons and all these other things that are going on, and just fundamentally because it's just not looking good. You're going to get diluted. Are they ever going to be able to achieve the scale they need to succeed? If the economy continues to tank and the financial situation gets worse and so on. Another key detail is them increasing the number of employees and defending the increase in the number of employees. It makes a lot more sense to spend your CapEx, make your employees more productive than it does to hire more employees. And they've pushed off their CapEx 800 million from 2022 to 2023, another 800 million from 2023 to 2024. We don't know what their CapEx plans are for 2023. If you don't spend the money on CapEx, then you don't expand your ability to grow and produce in high volume. And then you're screwed one way or the other. I mean, the only hope is that they're able to ride out this economic storm and the cost of capital gets cheap again. And then they're able to raise money and be able to make it last longer. But I'm not, I wouldn't put more money in this company if I was the Saudis, but I'm not the Saudis. So please check out my other videos. Check out the t-shirts, elonbits.com. Let's be less wrong. Please support me on Patreon, on the Locals platform, as a YouTube channel member. Please like this video, share it, and subscribe. And thank you so much for watching.